Manas Agrawal, Vice President Research of the Bernstein SocGen Group, joining us to talk to us about just that. Hi Manas, good to be speaking with you. Thanks so much for making time. Tell me what has changed now, why the initiation on insurance as well as AMC, what's making you look at these segments more positively now?
Sure. I think from a top-down perspective or a penetration perspective, the story is reasonably clear. We, as a country, need to have more adoption for these products. That was true years back. That is true today. So bottom-up growth should be strong, driven by penetration. What's really made us positive right now is one. I think growth is coming back into insurance. Regulatory issues have plagued the industry over the last 2 3 years. We think regulatory issues should not be such a big problem going ahead. All known open issues have been resolved and the impact has been absorbed. Margin impact from recent changes is lower. So investor interest is coming back. We think it's a good time, especially given where valuations are relative to their long-term trading averages. Asset managers, we think the bottom up story long term is positive. We take a view that the trend of financial savings growing faster than physical savings will continue, with mutual fund flows being strong. However, these businesses are cyclical, and at this point, for that reason, we prefer private life insurers over Indian asset managers.
Yeah, because talking about the regulatory challenges, it seems like while it might be over for insurance companies, not really the case with AMCs because it's still a developing situation. Whether I know they're not as impacted by the F&O speculation, but whatever rules keep on coming with respect to expense ratios or the other internals coming in, there is still a bit of overhang when it comes to the AMCs. Would you concur?
I think slight nuance over there. Yes, there was a discussion paper that came in some time back. There was strong industry pushback, and I think the feedback has been taken on board. The focus now has shifted to curbing excesses in the FNO side of things, and mutual funds as such are not as impacted by that. I think even if the proposed changes in expense ratios were to come through, I think the industry has already come to a consensus that the pain will be shifted to distributors rather than asset managers taking all of it. So that is a mitigant, not to say that that cannot happen, but we think it's a low probability event. Even if it was to happen, distributors will take more of the pain, and therefore large asset managers with performance tailwinds who have more bargaining power should be able to mitigate a very big impact on revenues.
Talking about bargaining power, it is very evident that you prefer the private insurers versus the others. So, just wanted to get a sense, what's your pecking order within insurance and what makes you positive on the likes of SBI Life, HDFC Life?
Sure. So the pecking order is SBI Life, Max Financials, HDFC Life from a stock perspective. LIC is a market perform. We are underperform on Prudential ICICI Pru because we think bank distribution is a big chunk of the total business. I think it will remain to be a big chunk of business going ahead as well. On that metric and on terms of brand, we've done some analysis on uh, what pricing power people have, and HDFC and SBI screen well. The other is product mix as well, balanced product mix for Max and HDFC. SBI and LIC have upside on margins from product mix. So all of that we think will feed into strong growth or market share gains for SBI, HDFC, and Max. ICICI Pru, although growth will improve relative to the last 5 years, we think it will still lag other private sector players. LIC, we think, will continue to donate market share. That defines our pecking order.
Okay, fair enough. But what do you make of the pricing situation in the industry right now? Do you think it's at a comfortable level, which is lucrative for the companies, or do you think they will have to indulge in a bit more price hike to make sure that their margins are taken care of?
You're right. Competitive intensity has been a problem, especially by the unlisted players who are chasing market share. This is now widely understood and it is broadly in the price. We've seen some media reports saying that price hikes in term plans are going to come through or have been impacted in this quarter. I think that's a positive development if that price hike sticks through the next quarter as well. Uh, Better pricing is obviously going to help margins, and margins in the term plan product have suffered due to competition. So it is a welcome move. We'll have to wait and watch whether these price hikes stick. because most big players have taken those hikes, at least in some or the other way, at least in some or the other cohort. I think there's hope that these price hikes can stick, leading to one better growth outcomes. It's not only volume, it's also price impacting growth, right? And the other is margin from a non-par perspective.
Yeah, while that price hike will be definitely profitable for these companies, not really sure if it will be a great news for the consumers. But what perhaps could be a better news is what happened with respect to Mr. Nitin Gadkari writing into the finance minister, requesting perhaps some sort of GST waiver. Let's see whether that happens or not, because that would definitely be a bit of a fillip coming in for the entire sector. Just a word on PB FinTech as well. Do you think you're a bit too late in terms of the upside that you're expecting there? Do you think bulk of the money has been made?
I think, yeah, valuations are stretched, but I think the long-term growth story for PB FinTech gives us comfort on our call. Essentially, if you see, despite very strong growth over the next 7 8 years, PB FinTech would reach a 5% market share. If I was to stretch it even further, it goes to sub 10% market share 20 years down the line. So I think one, growth comfort, and I think the other is I am a bit more positive on margin trajectory than what people are baking in. So I think those two are driving valuations. Yes, a lot of gains have been priced in, but I think there's upside. There's some upside in the near term. But I think long-term investors who can hold for a longer period, take a view on long-term growth and profitability, I think there's still value to be extracted over